BHP has got its new financial year off to a good start. The diversified miner has reported production increases across all its major commodities for the first quarter. Copper output rose 4%. That was largely driven by higher grades and improved recoveries at the Escondida mine in Chile. Meanwhile, iron ore production ticked up 2% thanks to the easing of bottlenecks at its Western Australia operations. And BHP also reported signs of stabilization in its steel-making coal business, with production soaring by 20% in the quarter. BHP's operational update comes as speculation rises that the miner will make another bid for Anglo American. That's according to the Financial Times. The report says that BHP Chief Executive Mike Henry met government officials and the Public Investment Corporation in South Africa last week. The PIC is Anglo's second largest shareholder. Government also owns a stake in the company. The meeting centered on how BHP could make another offer after the standstill period comes to an end on November the 29th. BHP's initial offer for Anglo required the firm to demerge its South African iron ore and platinum businesses, and this caused a political uproar in the country. Impressive, that's how PSG Financial Services has described its performance during its first half. The financial services group has posted a 28% increase in recurring headline earnings per share and a return on equity of 26.2%. That's thanks to more favorable equity market conditions and sustained high interest rates. An interim dividend of 17 cents has been declared. That's an increase of 26% on the previous period's payout. PSG Financial Services says it is confident about its long-term growth prospects and so will continue to focus on investing in both technology and people. DRDGold has delivered a shining set of results for the first quarter. The surface gold recovery company has reported a 7% increase in the production of the yellow metal, and that during a period where the rand gold price rose. This contributed to a 17% jump in pre-tax earnings to 681 million rand. Mondi's earnings have taken a knock. The packaging and paper company has posted a 36% quarter-on-quarter slide in underlying EBITDA during the third quarter. That's as a result of planned maintenance and a forestry fair value loss. Softer seasonal demand and high input costs also weighed. Looking ahead, Mondi says fewer planned maintenance shuts have been scheduled for the fourth quarter and demand is expected to pick up. Combined Motor Holdings has posted lower half-year profit. The firm, which operates vehicle dealerships and owns a first car rental, has reported a 32% decline in headline earnings per share. It says that drop was largely due to poor returns in May during the build-up to the elections, and also in June when the results were analysed and the GNU was formed. CMH has added that consumer confidence was low and there was a reluctance to spend on big-ticket items. The firms declared a dividend of 102 cents, which is 30% lower than the previous period. Premier is hoping to serve up a profit bump. The food producer says earnings per share for the first half are expected to be as much as 35% higher. The projected rise is due to margin management and cost-saving initiatives. This helped the group weather several challenges, including a high interest rate environment, constrained consumer spending and volatile soft commodity prices. The firm will release its results on the 12th of November. In company news further afield, Nestlé announced it is revamping senior leadership and its operating structure, cut its full-year sales outlook and reported worse than expected 9-month organic sales growth after failing to raise volumes amid continued price hikes. Let's take a look.
Nestlé is making some big decisions as sales flag. The Swiss giant on Thursday reported that growth fell short of forecasts. It was just 2% over the first 9 months of the year. Sales volumes also failed to match expectations after the firm hiked prices again. An executive said rising costs for coffee and cocoa were among the pressures faced by the Kit Kat and Nescafé maker. Both have touched repeated record highs over the past 2 years. Now the company says it's going to revamp its senior leadership and operating structure in response. It also cut its sales outlook for the year to just 2% growth, down from 3% in earlier forecasts. New Chief Executive Laurent Frex said consumer demand had weakened and was likely to stay soft over the coming months. He took over in September after predecessor Mark Schneider was ousted following several previous quarters of weak growth. Among changes, Nestlé will reduce the size of its executive board. It will also merge regional units, including its Latin America and North America divisions. Next week, analysts will be watching rival Unilever to see if it fares any better. The UK firm is forecast to see sales volumes grow by over 3%, while raising prices less than Nestlé.